Imagine a world where your favorite digital creations could be owned, bought, and sold like rare treasures. Welcome to the realm of non-fungible tokens, or NFTs. Some people made a lot of money from NFTs.
NFTs are sweeping the art world,
while others have faced some losses. But where there's money, there are also taxes. Today we're demystifying the taxation of NFTs, breaking down what you need to know in simple terms. So whether you're a seasoned collector or just diving into the digital art world, buckle up as we navigate the landscape of NFTs together. What's up, team? Welcome back to another episode of the Tax Huddle, where I'll be sharing some financial winning plays to help you beat Uncle Sam on the financial field. Now, in today's episode, I'm diving right into NFTs and taxes and unpacking the latest rules and everything you need to know about. But before we break the huddle, make sure you hit that like button, subscribe to my channel, comment below, and most importantly, pass this video on to your friends, family, and anyone you know who's looking to level up their financial game in 2024. Now, let's break the huddle and dive into NFTs and taxes. Ready? Break! NFTs, or non-fungible tokens, are digital assets that are one of a kind. Think of them like rare Pokemon cards in a digital world. Unlike regular digital money, which you can swap around like spare change, each NFT is unique and can't be swapped for just any other thing. Now, how do these digital treasures come to life? Well, they're minted just like how real coins are made, but in the virtual world. Then when they find their home on websites where people buy, sell, and trade them, it's like a big digital swap meet, all managed by smart contracts, which are like digital bouncers, ensuring everything is fair and square. Where do all these transactions live? On something called the blockchain, which is like a big digital ledger that records who owns what, and this keeps everything safe and secure. Now, what kind of things can you find as NFTs? Pretty much anything under the sun. Digital art, cool collectibles like baseball cards, even virtual real estate and games. It's a wild world out there. Now let's talk numbers. During the pandemic, NFTs got super popular, with some selling for millions. But don't worry, you don't need to be a millionaire to get into the action. Most sell for less than $300. Oh, and one more thing. The IRS has finally chimed in, and they said if you're dealing with NFTs, you gotta let them know. So if you buy, sell, or have gifted an NFT, you need to check a box on your tax form. So whether you're into digital art or you're just curious about the digital world, understanding NFTs is pretty important. So stick around because we're gonna dive a little bit deeper into how NFTs and taxes shake hands in the digital realm. All right, team, now let's dive a little bit deeper into the world of taxes and NFTs. So the IRS have decided to treat certain NFTs as collectibles for tax purposes. Now, why is this important to you and me? Well, imagine you've been holding on to one of these collectible NFTs for more than a year. Think you're in a decent tax rate when you sell it. But surprise, instead of the usual maximum capital gains tax rate of 20%, you're hit with the 28% rate. So not exactly the news you were looking for. And here's the kicker. If you use your retirement account like your IRA to buy one of these collectible NFTs, get ready for some extra paperwork. The IRS sees that as a taxable distribution, which means you might end up owing even more in taxes and facing early withdrawal penalties. Now, you might be wondering, what exactly counts as a collectible? Well, it's not just limited to rare coins or vintage stamps. According to the tax code, it could be anything from a piece of artwork to a fancy rug, even your favorite bottle of wine. And if the IRS hasn't listed it, they still have the power to add more things to the collectible list. So why does this even matter? Because it affects not only how much taxes you pay, but also some other tax stuff, like new market tax credits or health savings accounts. It's like a whole new level of tax complexity that we have to navigate through. So if you're dealing with collectible NFTs, make sure you're keeping track of all of this, because Uncle Sam doesn't mess around, especially when it comes to his share of those digital treasures. All right, team, now let's dive a little bit deeper into the tax implications of NFTs. Now, just like how you pay taxes when you buy or sell something in the physical world, the same goes for the digital assets like NFTs. Whether you're swapping an NFT for cash, another NFT, or even cryptocurrency, Uncle Sam wants his cut. So let's break it down with a couple of detailed examples. Imagine you've been holding on to an NFT for a while. Perhaps it's even appreciated in value, and you decide to cash in. Well, depending on how long you've held on to it, you could be looking at different tax rates. If you've held on to it for more than a year, you'll likely pay the long-term capital gains rate, which is generally lower and friendly to your wallet. But if you sell it within a year, you're looking at ordinary income rates, which can be a bit steeper. Now here's where it gets interesting. Let's say you bought an NFT with Ethereum, one of the most popular cryptocurrencies out there. When you make that purchase, you're effectively selling your Ethereum for real currency and then immediately using that cash to buy the NFT. And guess what? That initial sale of Ethereum triggers a taxable event. Yes, you heard that right. Even just as converting your crypto to buy an NFT can have tax implications. So let me illustrate this with an example. Let's meet Peter. He bought some Ethereum a while back for $1,400 and used it to snag an NFT. When he made that purchase, the value of Ethereum had actually gone up. so you end up with a short-term capital gain of $100. Now, if he would have held on to Ethereum for over a year before buying an NFT, he would have been looking at a lower tax rate. Now let's talk about the creators. When they mint or create an NFT, it's not a taxable event in itself, but when they sell that NFT, it's a different story. If they're doing it as part of their business, they'll owe self-employment tax on the income. But if it's just a hobby, they'll still owe income taxes, but without the self-employment tax. So whether you're buying or selling NFTs or even creating them, it's important to keep Uncle Sam in mind. Taxes might not be the most exciting topic, but it's part of the game, and when it comes to NFTs, we have to learn how to play the game. Now let's dive deeper into the intricacies of donating NFTs to charity and the tax implications surrounding gifting them. When it comes to charitable donations, if you've held onto your NFT for over a year and decide to donate it directly to a qualified charity, you could deduct its fair market value on the date of donations from your taxes. However, if you owned it for less than a year, your charitable donations is limited to the lesser of the NFT's basis or its fair market value. But here's a smart move. If the NFT's value have decreased since you've last purchased it, it might be wiser to sell it first and then donate the proceeds to charity. By doing this, you can claim a deductible capital loss as well as the charitable contributions of cash. Now keep in mind, if your donated NFT is worth more than $5,000 and you've held it for over a year, you'll need an appraisal from a qualified appraiser and attach it to your tax return along with IRS Form 8283. Now let's talk about a special rule for collectible NFTs. If a collectible NFT is used for a nonprofit's exempt purposes for at least 3 years, you may deduct its fair market value at the time of the donation. However, if it's not used or if it's sold within 3 years, your deduction is limited to the NFT's basis. What about charitable donations by NFT creators? Well, NFTs created by a donor aren't treated as capital assets because they're created by personal efforts, not investment. The charitable deduction for creators is limited to the cost basis, excluding the value of their time or labor. Now moving on to the gifting of NFTs. If you're the generous giver of an NFT gift, there's no tax impact on the recipient. However, if the recipient later sells the NFT, they will owe taxes on any gain or even could have some deductible losses. Now let's quickly touch on NFT airdrops. These are free NFTs distributed to a community for promotional purposes. Remember, these airdrops are taxed as ordinary income based on their dollar value at the time they enter your wallet. And lastly, don't forget about gas fees. These fees charged by online platforms for NFTs transactions can be added to your tax basis if you're a purchaser or deducted as a business expense if you're a creator. So be mindful of these tax implications when donating, gifting, or receiving NFTs, and always consult with a tax professional for personalized advice. Now, before we wrap up, let's summarize the key points you need to remember about NFTs and taxes. Firstly, NFTs are unique digital certificates of ownership for virtual or physical assets, ranging from digital artwork to music and collectibles. While they're traded on online platforms like cryptocurrencies, they're not interchangeable or freely convertible into dollars. Secondly, according to the IRS, NFTs are classified as digital assets. This means that if you engage in an NFT transaction during the tax year, you must answer yes to the digital asset question on Form 1040. Thirdly, for purchasers, NFTs are considered capital assets. This means that any gains or losses realized from selling an NFT are treated as capital gains or losses. On the other hand, for creators, NFTs are treated as non-capital assets, and any income generated from selling them is considered ordinary income. Now keep in mind that because NFTs are typically purchased using cryptocurrencies, purchasers may recognize capital gains or losses when exchanging their crypto for an NFT. Now when it comes to donations, giving NFTs to charities can result in charitable deductions, while receiving NFTs as gifts isn't considered a taxable event for the rest. So whether you're buying, selling, or creating NFTs, understanding their tax implications is crucial. Always consult with the tax professionals to ensure compliance and make the most of your NFT ventures. And with that, you're now equipped with the knowledge you need to navigate the world of NFTs and taxes confidently. If you've enjoyed these tips and want to see some more financial winning plays, please take a moment to hit that like button, subscribe to the Tax Huddle, and pass this video on to your friends, family, and fellow financial players. Until our next huddle, I'm your coach, Ibrahim Muhammad.